Everyone. It is Wednesday, April 6th. We're doing the morning market analysis with Brian Caprice. Todd Rich is out of the office today and will be for the next week and a half. Please don't turn out, though. We've still got a lot of great content. Today, we've got stuff all over the place. We've got indices, bonds down, VIX up, a lot of stuff going on. We're going to cover off a bit about everything in a pretty crazy environment. Before we do that, though, real quick, everybody should understand trading involves risk. Trading on Nadex is no exception. You can lose everything you put into one transaction. Make your own decisions. Brian, it was great. I know we've got a lot of dedicated followers and fans out here. Brian's awesome. You need to take responsibility for your decisions. Just because we say something, we're trying to educate on the markets, not give buy and sell signals. So make your own trading decisions first and foremost and manage your risk. That's the number one job as a trader. With that, Brian, we'll kick it off and I'll flip it over to you.
Sure. Yeah, looking in the overnight, there's definitely been some interesting movement, although a lot of it has been retraces. And again, that's very common right now with kind of where we are with the stat of interest rate rises and comments like that. The dollar yen in particular is like the perfect example of it. But the same scenario where, the last 24 hours, technically it's up, but the last 60 minutes have been retracing back and forth. Aussie dollar, you're kind of seeing something similar, but Euro pound dollar or pound yen, same thing. Up in the overnight, but now in the more near term, things are starting to reverse a little bit back as we are starting to roll into the US based session. So overnight headlines, there really wasn't, I would say, I don't know, not really a ton out there. The one big one from about 2.5 hours ago is Russia says the foreign banks have rejected the Eurobond payments. Remember, different nations have bond and debt with other different nations. It's a way to kind of hedge and spread things all over the place. They were able to pay their US based payment. Even though the U.S. was trying to block that one. And now it looks like the European Union actually blocked them from making the payment. So it's kind of one of those, I don't know. They're trying to make them default, but if the bank doesn't accept the payment, I don't believe that's actually considered a default. And then there's a lot of questions about what's going to happen. It's like, well, you frozen our assets. Are you just keeping our assets? Because, it's not. It's a weird situation. It's one that we really haven't experienced and I haven't seen before. Again, bank seizures is nothing.
Currency, Brian?
What'd you say?
Can we talk about the value of a reserve currency for a second?
Yeah. And it's a very interesting scenario because, again, originally when the euro came out, it was kind of the model, and what a lot of people said was, this is great. This can be the next world-based currency. It's all these nations are using one thing. It makes trade easier. And then when there was a recession, we realized that Russia, the situation with the euro is, it's great when everything's good, but when it's bad for countries, right? So there was, all right, well, the euro's not going to be it. And the dollar, was able to maintain its supremacy as far as the reserve currency. The reserve currency is basically the world currency. But the problem right now is, and I've mentioned this a few times, and it's interesting that Europe has done the same thing as well. Nobody wants to default on any type of payments because it's like, oh, that country's bad, they defaulted. But if you don't accept it, it's not really a default. The U.S. is the reserve currency for the world right now. We talk about petrodollars. Everything is, globally is priced in the dollar. Problem is, if now you're weaponizing, you're not allowing a country to make payments into that, trying to have them default, you've weaponized something, and now you can't be the reserve currency if you can be used as a weapon, because the reserve is supposed to be something like a neutral ground that everybody can go to, and the United States up until recently has been that. So it is interesting. And again, the U.S. is supposedly ratcheting up sanctions today. Again, because of what they're seeing in the scorched earth policy when we're leaving, when Russia is leaving. What's weird about that is one of the people they're talking about going after is Putin has 2 daughters. So it's like, wait a second, we've already gone after oligarch's family, but we haven't gone after Putin's. Like, I don't know who makes the sanctions, but it's like, I don't know. It's very, very strange times, guys. And again, trying to get them to default on purpose, I don't think actually serves the purpose. And we've already found out that sanctions don't actually work. So I don't know what they're doing with the frozen assets. I can't answer that one. But, because of this and the craziness of this, we have one big problem today. And that's that the VIX is up another 10%. Yesterday we talked about it being up 10%. Huge rally. Again, all we did was go straight up yesterday. And again, yesterday morning we were already up 10%. We launched higher, and now we're up another 10% off of what we were. So we're back up in the 23 range. Because the VIX is so high, all the indices are in the red. And remember, today is FOMC meeting note day. Okay, we're going to hear about it. What's interesting too about this is Yellen has actually moved herself up, and actually, I think it's 13 hours. Yeah, source release testimony text 13 hours earlier than scheduled. So Yellen is trying to get all her information out there at 10 o'clock this morning to get it in, I guess, before FOMC. This was considered a yellow release, but the fact that they moved it forward, I guess it's Yellen trying to become relevant. So I'm assuming that she's going to say something that's also going to be changing kind of market direction. Again, right now, everything is straight down for the most part. ES and Q, and I'll go through this in a second. But Yellen is actually, her testimony is being released, again, 13 hours early. And then we have FOMC right afterwards. And what we've heard this morning, interestingly enough, one of the, yesterday we heard George making a lot of comments about we need to cut the easing right now. We need to raise rates. We need to discuss the pace. It's funny how everybody suddenly is like, oh my God, inflation is so bad. You're right. We need to do this. But yet Bullard was the only one last time that was willing to do it. But San Francisco Mary Daly, she said she's worried about inflation. Not that she was worried last rate raise, but telling the audience Tuesday that the high cost of living is causing a heavy burden on society, and that inflation, I understand that inflation is as harmful as not having a job. That if you have a job and you can't pay your bills, or you feel like you can't save for what you need to do, that's keeping you up at night. Our goal is to make sure that people stop worrying. It's becoming so much of a kind of political thing at this point. And again, here's what George was saying yesterday. We talked about. I think 50 basis points is going to be the option that we have to consider. And again, Bullard's the only one that said it's supposed to be. I'm waiting for his next comment. So yeah, we need to raise $1, or we need to raise 100 points. So we're going to hear a lot today. And again, the market right now, I don't know what it has factored in. Absolutely 0.25, but now there's more and more people that keep talking about this 0.5. As I said yesterday, Jamie Dimon said that he expects the Fed is going to have to raise a lot more than what people assume. That we could be doing 0.5 for the next 5 raises in a row. We could be going up 2 whole percentage points from this 0.25 to be able to halt inflation right now. So I think what Yellen says is absolutely going to matter. Again, we know how she was appointed into her position. Again, there will be a political kind of spin to this, but right now I feel like the Fed is also kind of has a little bit of political motivation. So right now, things that I would be looking for today is dollar strength. And again, we're seeing massive dollar strength in the pound yen, dollar Swiss, dollar CAD. It's fighting back again. Aussie dollar, even euro dollar, pound dollar. We're seeing, and again, those are pretty much flat for the most part. We're seeing dollar strength. Everybody is talking dollar strength because of that FOMC. Now, it is pulling back from highs, and those highs came in right at the European session. Right, here's what the Europeans are doing. They say, well, wait a second, it's supposed to be strong. Why the heck are the Europeans sending it down? Well, because they want to send it down because if you want to get long dollar, you want to make it cheap ahead of time. So at this point, I think the market is trying to figure out how to factor in 0.5. Right now, it's 0.25. If they are weak in this message later today, and again, I would say if they are weak, that's going to be a shock to the system. I think the dollar collapses, the indices go up. If they mention 0.5, I don't know. I feel like the market knows that it's coming, but thus far, they've always been a lot of talk and no action. Kind of see what we're doing today. But right now, I mean, not that we're trading the dollar in general, but again, a break below this level where we are right now, we do have a little bit of room to run, and there's this area right here that, I think it can fall down to. FOMC statement doesn't come in until later today, and again, this is going to be important for all your, basically pretty much everything. Here's where the FOMC statement, if by some chance we're able to drive down, this is kind of where the takeoff point would be for me, right here, okay? In which case you need to start getting long, or you need to start getting short. Euro dollar, pound dollar, you get long dollar yen, and then again, the indices could all be rolling. So it's set up on a purely technical basis that we should be short the dollar this morning. We'll see if Yellen mentions anything about that. And again, looking at the indices, because that's where we're going to see a lot of it. Yesterday morning, let's see. Yesterday morning, we were sitting right here, and we talked about this potential Harry Potter breaking through 45, 24, 20, 28. We did break all the way down. And again, if you got into the break, again, you could have. If you didn't, here was your Harry Potter entry at the European session open this morning. So the same trade, doesn't matter which day you took it. We talked about 45.07 being the target. It's blown through. It's at 44.77 right now. Where this can stop, I mean, in reality, if you look to see where price is right now, looking back at history, we do have a little bit of an area here, but it did chop through. So I'd say, I'm going to remove it. It could be a kind of a profit target at 44.64. But right now, we really don't have any true bouncing. And really, this is probably more from this level here, kind of coming off of it. is probably at 44.46. And again, that seems like, wow, that's a really far, really far move on the chart right here, right? This is what, 30 points, right? 30 points. Well, I mean, if we do like a 4-hour ATR, it's 35 points. So it seems like it's really far away, but understand, just in a standard ATR, even in the overnight, because it's using that data, that's just 4 hours worth of movement. And that 4 hours doesn't even take us, that takes us right up until FOMC. So yeah, I mean, question is, how much pre-positioning do we have on a 15-minute chart? I would say right now, be cautious. Again, we're not even getting any pullbacks. We may get a little bit of a pullback here. And I know some of you that like to see the fibs and again, believe in just purely fib trades. Again, that 23.6 is coming in right around 44.86 in ES. In Q, same push. I mean, yesterday we talked about, again, 2 different profit levels. We tagged both of them. You can see that actually, if you withdraw in here, use this profit level right here, you can see that it did drop down, it based, it pulled back, it grabbed it, and then was off to the races again. But right now, kind of the same scenario. We got a little bit of buyers right here. We had an old Harry Potter that's already out and done, so we can take that off. Really, the next major area of buyers is going to be down here at 377. So, again, looks like it's quite a ways off, but there's really, if you look to see what could slow us down, there's nothing. I mean, really, the first little hiccup that'll come in right where these buyers were was at 14,434, and we're up at 1460. So that's a 300-point drop. And again, could Yellen say something about, hey, listen, this is important, we really need to raise it? Sure. Yeah, I mean, this could be a big one. YM also, again, same type of Harry Potter drop. Again, yesterday we talked about, having this push all the way down to 34,496. It didn't move far. I mean, it kind of based at the open and then dropped down. And then, again, we kind of rallied up. And the European session came right back to that same basing. Again, European session has been a very good kind of entry for our indices. You can see the Europeans did nothing but send this straight down. Right? They were getting in ahead of time. So we look at this and say, okay, are they pre-positioning? Is the U.S. going to come out with something really, really kind of weak-natured? Are we going to rally back up again? Kind of looks like it, but again, using kind of fibs on this one to say, okay, where could I get in on a pullback? You can see that we do have a little bit of a level, and again, maybe a pullback at the open if we can rally from now to the open, 34,361. Again, could Yellen mess all of this up by basically saying we need to be prudent and go slow in the way that we ease because of the Ukraine and China supply chain disruption? I mean, we know that they like the excuses. And again, any excuses out there of why they can't do 0.5 should send them straight higher. Okay. Russell, the same thing. Again, you can see we obliterated the target yesterday in the Russell. Again, we talked about how fast it dropped. We talked about 2046, and it did. It hit it, it based on it, it came back and touched it. And again, same thing. Europeans, 3 o'clock right there, did nothing but shoot this straight to the downside. And again, if you want to use fibs to look for entry, this one's a little bit closer. But again, rising interest rates should affect the Russell the most today, so be cautious. And really, where can the Russell stop? I mean, you can see right now what price is. There's nothing in there until at least 2013, and this has already hit this area twice. Didn't go deep, and it's a better zone, but I would say as far as profit targets today on any shorts, I would say 2013 and 1984 would be 2 levels in the Russell I'd be looking for shorts. Oil, obviously, that's been a big one, and again, I feel like we should cover that real fast. Find on the chart. Oil, it did do some bouncing back and forth. It didn't go much higher, and we talked about how it was trying to find buyers. It did take a bounce from that level. It needed to come even lower, and now it's kind of just channeling sideways. I think the big rock hasn't dropped for oil yet. If you're looking to say say, listen, this is the last big drop, and this is kind of where the base is, we're still hovering and kind of bouncing back and forth. And I'll block this area off. You can see how much kind of where again. It bounced in, it based in there. It was a bottom. It was a top. It came back in, and now it's kind of stuck in there again. There's obviously some technical traders in there. It is up 1.7% already today, pulling back a little bit. And again, actually, it may actually be in a long. Yeah, it's kind of floating right around there right now. I would say I like the 50% retracement in oil right now. I really like the 23.6. You see this little area of basing right here? That's where I would say there's a potential for a push. And it is Wednesday, so I didn't even, whoops, not that one. Oil inventory. I didn't even pull the oil inventory report. Let me drag it across and see what it was, because that will come in today at 10 o'clock today as well. Yeah, they're showing a surplus in oil today, right? Just by a little tiny bit. So again, that may be why oil's pulling back, but the market is going to look at this and say, hey, listen, if I said there's going to be a surplus today, if oil pulls back at 10 o'clock, and again, the problem with this too is with her talking, oil is going to be at the exact same time. So, yeah, and look, they've actually dropped the oil down. But yeah, so we know that that's coming in. If at 10 o'clock we're sitting right at this 50, that 50 level is right around 102.08. Again, look for long potential. Biggest mover of the day, natural gas, and I mentioned this yesterday. Be very, very cautious in any way that you're trading. This one. It's basically, if you had to pick one asset to trade that is considered the geopolitical pair, it's natural gas right now because Russia owns so much of it. It is up another 5.25% today. We are bouncing off of a level right now at 640. So again, that is giving us a little bit of a pause. But again, this really kind of ground up, and then at 7 o'clock today is when really the price popped. And I believe, 2 hours ago, that just happens to be when we got this data about Russia. So, as I said, it's a very serious game that these nations are playing. We've had, I forget who said it, but somebody in the economic counselor or director, whoever it is, basically said sanctions have not worked with China. For some reason, they think that sanctions are going to work on Russia. Again, the goal was to destroy them economically. The ruble's higher than it was back in September of last year. So, and again, we know that they need. We need the natural gas, and not we, but we know that Europe needs natural gas and oil from Russia. So, this is a very risky game. I'm not exactly sure why they're doing it. Because like I said, you want to talk about people suffering. If you can't cook food and you can't heat your houses, that's kind of the stage they're getting to. So,
something interesting on that real quick, Brian, because I know we're running a little bit over here, but mentioned Yellen's comments, and I think the meat of her testimony, it's already a very well prepared statement. But you talk about people need food, people need to heat their houses. The top three things she's apparently talking about today are food security, energy security being the top two, followed by debt sustainability. Three major topics we kind of hit on here. Obviously, a lot of these comments when they first come out are fairly ambiguous. People try to read into what she's going to say when it gets into the more of the ad lib, the questions and what comes out of those. So could be interesting to watch.
Yeah, and I think this is the one. This is kind of the, I don't know, the Joker today, I think, is what we need to watch out for. China, obviously, they're locking down different areas. We haven't, every day it seems like this has been slowed, and you're seeing their services activity has dropped in March as virus containment. So they're containing things. We haven't heard the second piece of this yet, and I'm wondering if that's what we're going to hear today as well. Again, this does not help inflation, but there's nothing you can control about this. When if China locks down, remember, they are an export-based nation. The first time that there was lockdowns that occurred, supply chain. We heard about supply chain. So, I think, kind of this is where we end. Supply chain is never good, and now Deutsche Bank has basically said they're the first big bank that has forecast a U.S. recession. So, we've heard comments, we've made, kind of assumptions, but now we have big banks saying it. We haven't heard a single peep of the supply chain disruption from China locking back down again. We're talking about raising interest rates today and how serious it is. Again, like I said, I think what she says in her speech is really going to jack the markets around. I think the way to play it today to be safe is really kind of, again, drop it down to those 15-minute candles. Look to see where the pullbacks are at the open, see if there's anything decent in here. And again, the way it's rallying up right beforehand, again, I think the reversal comes today at 10, not 10:30. And again, remember the oil inventory report is going to be at 10:30. So there's a lot going to happen this morning. And again, even after all that is said and done, after the movement, we really don't know what the FOMC meeting notes are going to be and how big, how fast, and what the timeline is. It could be a day that you definitely want to make sure that you have limited risk positions on. So I'm sure there'll be more than a few futures traders today that lose some chunks of money in large, fast moves. So again, make sure you guys understand what products are the correct ones to use today. As far as Nadex goes.
Clearly, my bias on that, and one of the reasons why I came to Nadex, and I've been talking about Nadex since 3 years before I was there 14 years ago, is that limited risk nature, particularly on days like today. I can't speak highly enough about that because markets can move fast. And like you said, in the outright markets, futures, and anything that's too leveraged without some type of risk mitigation that's guaranteed can lose a chunk of money fast. You know what? With that, I'm going to go ahead and remind everybody exactly that point. I love Nadex and the limited risk nature of that because you always know the maximum up, but it still involves risk, right? got to take accountability for that risk. Brian, great picking out some levels here, some great ideas for us to think about. Choose to take those. Do your homework, take accountability, and manage your risk. But with that, I'll sign off for the day. Brian, thank you very much. I'll look forward to being back with you tomorrow.
Sounds good.